Hi, Andrew Bell with you. As we rapidly approach the last months of the year, I want to put a few things to you and see what all the recent facts spell out for you. First, the latest report shows that Australia will deliver 30,000 fewer apartments this year than previously expected, as developers hold off on projects they couldn't sell profitably, and weak pre-sales and weather delays have slowed construction on others. The number of apartment completions will drop from 64,031 last calendar year to about 52,500 this year, which is well below the 81,500 that had been forecast to be built 2 years ago. Second, investors are on the rise. Housing investors' credit growth overtook owner-occupier home growth in April of this year, just after the Reserve Bank began cutting interest rates. We've seen investors come back in the market, particularly in places like Queensland. Credit growth for housing investors accelerated to 6.6% in the year to August, up from just 3.9% the year earlier. Home buyers are also active, with owner-occupier lending expanding by 5.7%. So between the two, that's strong growth in buyers. And the high concentration surge in investor activity is likely to have a very big impact on the market now. And amazingly, and many of us may not feel it, financial pressure on Australian households is easing, with the Reserve Bank of Australia saying the number of mortgage holders at risk of falling behind on repayments is less than 1%. Now that's the lowest since 2022. The number of mortgage holders in arrears, that is, behind in payments by more than 90 days, peaked in September quarter of 2024 and has been declining ever since. And now there's a new surge, first home buyers. There's unprecedented demand for new first home buyer government grants. And people are literally queuing up at some mortgage brokers to fill out their forms. Now, by abolishing the income limits of $125,000 for singles and $200,000 for couples, Treasury estimates it will make 70,000 people now eligible in the first year of this accelerated grant that started in October. Now that's up from a maximum of about 50,000 annual places previously. Now TikTok data reveals first home buyers are actively researching local market conditions and alternate ownership strategies like reinvesting and technical processes, meaning they're coming to the market far more prepared and strategically prepared than in previous generations. The kind of priced out of the market narrative is questionable for these people now. First home buyers aren't waiting helplessly for market conditions to improve. They're actively building knowledge and preparing to enter the market as informed investors, not emotional purchasers. So, I don't know what that all spells for you, but to me, it says diminishing supply continues and increasing demand continues. No surprise then that the housing prices recorded their biggest monthly jump in just under 2 years in September and are expected to accelerate further as cashed-up buyers compete amongst a dwindling supply of options. That's been reflected in the latest figures on the Gold Coast, which saw home prices jump 9.2% over the past year. PropTrack's latest home price index confirms that the glitter strips of the Gold Coast continues to close in on Sydney as the nation's most expensive housing market, even though the Gold Coast annual growth was still behind Brisbane, which recorded 10.23% increase over the same period. What an amazing real estate environment we have throughout the country. Not one for the faint-hearted, and certainly not one we want to pass on to the next generation. We need to do something. And so everything comes back to one single issue, supply. So much more needs to be done to get supply on track. And this is going to require all three levels of government to work in a far more cooperative way than ever before, which has largely been impossible because of politics. It certainly is now time for governments, no matter what their political persuasion, to work cooperatively, to get zonings right, to get taxation rules right, to get taxation incentives right, to get approvals pushed through faster, and to put incentives in place for those doing the construction to get in, take some rest and do so. It may well be that there's going to have to be some guaranteeing of financing for certain developments to get them underway, because what's been done to date is just far too inadequate and just not making a difference. Look forward to being with you again in a fortnight's time.